10 years from now, Bitcoin, we hit 1 million, which is just really a 10x. It's not so big. Then that's 20 trillion. And then I have the altcoins will be 10 trillion. And then I think the equity in the space and anything that touches blockchain from a business perspective will be 20 trillion. All of the scaffolding, all the blockchain use cases, all of the integration of payment, everything you can think of, integration of media and NFTs and everything, I think that's another 20 trillion. Every investor, I say you should have the same exposure. You should have Bitcoin, some exposure to Bitcoin, some ethereum, you have a little bit of a venture fund and a little bit of a growth fund. And those four things, you can decide what percent you want. But if you have that exposure and you hold it for 10 years, I will guarantee you will make money.
Right now, the crypto world feels like it's spinning out of control. Prices shoot up like fireworks, then crash like broken glass. Projects come with bold promises but vanish without a trace. Regular people keep getting trapped in the chaos, losing money faster than they make it. But what if someone from Wall Street, someone who's been through the worst of financial storms, is now saying Bitcoin isn't dying anytime soon? It's just getting started. It could explode from its new all-time high all the way to $1 million? That man is Dan Tapiero, not a loud crypto influencer chasing likes, but a serious investor who's spent over 25 years managing billions and working with legends like Steve Cohen and Stan Druckenmiller. The kind of experience you don't fake. The kind built on surviving market collapses, currency meltdowns, and hedge fund disasters. And now, he's betting everything on crypto. Tapiero now runs 10T Holdings and One Roundtable Partners, managing over $1.5 billion in blockchain and crypto investments. Back in 2019, he convinced a conservative school endowment to put just 1% into Bitcoin, turning a small $5 million bet into more than $60 million. And now, with full confidence, he says Bitcoin is going to hit $1 million in less than a decade. But there's a huge problem. Crypto isn't like stocks or bonds. It's 50 times harder. Most people get crushed because they buy in panic, sell in fear, or chase nonsense projects that promise the moon and disappear overnight. Tapiero warns that this space doesn't reward emotion, it punishes it brutally. His advice is simple: buy Bitcoin, store it offline, and walk away. Because if you're not ready to lose sleep and handle wild swings, this market will destroy you. Now, let's watch clips from Dan Tapiero's interview to gain more insight. Please don't forget to like, subscribe, and enable notifications for more in-depth content. Thanks for joining us again. Enjoy the rest of the video.
When did you decide to go all in crypto?
2018, 19.
Why?
So the market collapsed, as you remember, in 2017, peak, and it collapsed. And I'd seen that many times, where you have big bubbles and blow-offs and then a collapse. In the traditional markets, that happens all the time. I thought, okay, well, Bitcoin was 3,000, 4,000, 5,000. I thought, well, it's either going to go to zero and if it doesn't go to zero, it's the bottom and there's going to be huge upside. As a trader, what you normally do is you start buying first. So I started buying at that time for myself. I convinced the school. I did other things. And then as you buy and your position gets bigger and it starts to work, you do more and more and more and more work. What I realized was that Bitcoin was many, many different things. A network, a new technology, a new system of value, so many different things. In fact, at the DAS conference just now, Michael Saylor spoke about his 21 points about Bitcoin. My original thoughts that I had and that I expressed in that 2019 interview with Raoul Pal that ended up getting hundreds of thousands of views. He has refined and expressed that 10x better than I did. I sat there and I've heard him 50 times, but he keeps refining. He keeps explaining different aspects of Bitcoin that make it valuable and more valuable in his mind. And it's just such an excellent presentation. But look, I had a very simple epiphany. I was like, well, this is the only and sort of the greatest decentralized network ever built. At the time, I think Amazon was worth $1 trillion or $2 trillion or something like that. The Bitcoin the value of Bitcoin at the time was 200 or 300 billion. So I thought to myself, okay, well, you have one company that sells stuff online. That's worth 2 trillion. This is the greatest decentralized network ever built, never be built like to that degree ever again. It's got to be worth at least twice of Amazon. And so then that's part of the, at least. So that was my, my initial, I had many, many points along the way that, gave me confidence to go all in, as you say. But it was that initial comparison as an investment compared to other investments that I saw that it was undervalued. And so my risk, I thought, was limited. And I thought, well, wow, it could be much more than that. And I thought, well, where could it really go over the next 10 years? And that's when I came up with the name 10T, which stands for 10 trillion. And at the time, the total space had $300 billion of value. And I said, I think it can 30x in 10 years. And I said, no one will ever believe that that was my view unless I put it into the name of my fund. And so that's why, and today we're at 5T. 5 trillion is the value of Bitcoin ETH. All the alts and all of the equity in the space, our sort of internal assessment is 5 trillion. So for our fifth fund, there's no way, that can't be 10T. It'll be one roundtable partners rolling out our 50T fund. Because I think 10 years from now, Bitcoin, we can hit 1 million, which is just really a 10x. It's not so big. Then that's 20 trillion. And then I have the altcoins will be 10 trillion. And then I think the equity in the space and anything that touches blockchain from a business perspective will be 20 trillion. That's what I think. All of the scaffolding, all the blockchain use cases, all of the integration of payments, everything you can think of, integration of media and NFTs and everything. I think that's another 20 trillion. So that's where I have 50T now, I think, in the next 10 years. We really accelerate, and it's now, we have the real catalyst for the first time ever, which is the Trump, the government change here. Well, I have a pretty big exposure in the funds. So you have to be careful being too duplicative. I have my gold company. I have exposure there and some gold. But the reality is my exposure to this space, liquid plus the funds plus anything I do, it's over 50%.
And you're not planning to sell anything, even if it goes up another 5 or 10x, right? To rebalance or
no,
like
no. But the funds will self-liquidate. I mean, like we like for instance, we own Circle. I will get money back from my investment in Circle, and but I will put that back into the space. If you know what you like and you have an eye for something that is exciting for you. So we also have contemporary, we have, all sorts of different things. But NFTs, I think really more are about attaching digital value to something that's creative in the analog world. So it can be like music rights. It can be, it's the creator economy. I really believe in that. I believe artists should theoretically, every time one of their paintings gets traded, why not? Why shouldn't they have, 1% clip or whatever it is? So I like the idea of incentivizing a creator. Now, there are a lot of, problem is, as within our space, there's so much garbage. There is so much garbage. There's so many, it's unfortunate, just, I don't want to say bad actors, but, nebulous players, and you yourself were hurt in this scam of the Luna. It's a scam. There's no such thing as an algorithmic stablecoin. It doesn't make sense. I know what a stablecoin is. It's a pegged currency. You can't be pegged and also move. I mean, I was telling people that, and they're like, no, Dan, you have to get invested. You have to. And I was like, dude, listen. I broke currency pegs, or I did trades where currency pegs for 20 years, okay? The Thai baht, the ERM crises. I know what a currency peg is. The Hong Kong dollar, I never broke. I'm just saying a stable coin is like a pegged currency. It cannot be algorithmic. It's an oxymoron. I'm just saying it's a scam. And there are scammy people in the space. And what I'm hoping now is that because the U.S. has sort of decided to make itself the crypto blockchain capital of the world, that we start to bring a little more legitimacy.
So why is Tapiero so sure this wild bet will pay off? First, he says Bitcoin is the greatest decentralized network ever built. He compares it to Amazon and points out that when Bitcoin's market cap was just $300 billion, Amazon was already worth $2 trillion. That made no sense to him. How can a company that sells books and gadgets be worth more than a financial system that could replace global banking? His answer is simple. It can't. Bitcoin is still massively undervalued. Second, he believes the growth of crypto is just getting started. Right now, the whole digital asset market is around $5 trillion. But his 50T fund vision sees it exploding to $50 trillion, with $20 trillion going to Bitcoin alone if it hits $1 million per coin, another $10 trillion to altcoins like Ethereum, and the remaining $20 trillion to businesses building real systems on blockchain, just like cloud companies did in the 2000s. Third, Tapiero practices what he preaches. Over half of his personal liquid money is in crypto. He doesn't trade it, doesn't chase rallies, and doesn't sell in crashes. He holds, especially Bitcoin and Ethereum. His message is clear. The only way to survive is to buy and forget. But this isn't blind faith. He's been burned before. In 1994, he made huge gains on Japanese bonds, then lost half of them in just 1 week. That painful memory taught him the most important rule: never risk so much that you can't come back from a loss. And that's why, even now, he's okay sacrificing some upside if it means protecting the downside. Let's watch more clips from Tapiero's interview for more in-depth insights and analysis.
I'll tell you, early in my life, in 1994, I had a very big bet on Japanese government bonds, and in 93, and made a fortune in those. And then in 94, the market completely wiped out. 1994 was the worst year for bonds since the 1929. So it was the worst year in, whatever that is, 50 years. And many of the global macro investors, portfolio managers, got carried out or crushed in that 1994 year. Very difficult year. And thankfully, the position I had on was in options. And so I only lost my premium. But imagine this, in 1993, this is in my own account. This is while I was working at Tiger. I was up thousands of percent return, multiple thousands in 1 year in bonds, leveraged bonds. In 1 week in March, I lost half of everything I made in the previous year in 1 week. So after that, I didn't really talk for about 3 months. I was completely shocked, and I misassessed sort of that, where the market was and the macro fundamentals. I ended up being right long-term because the market collapsed for the rest of 94. And then in 95, 96, 97, those bonds, went to basically zero yield. So they ended up, I had this view in 93 that Japanese yields would go to zero for a long time. And they were at the time like 7, 6, 5%. So it's a very sort of bold call. And what you realize is that you can be right on the long term, but I was completely carried out in the short term. Also, one other thing is that to become public, there's a standard. It's difficult. So that's the greatest problem in our space, is the trust. Okay, you have Bitcoin, you don't have to worry about trust, but everything else, and I think there are lots of different use cases. It's very funny because I say to everybody, I'm a Bitcoin maximalist, but I also believe in a multi-chain future. So, because I don't think that you use Bitcoin for everything. You don't use it for buying coffee. In fact, you should never ever sell your Bitcoin. 10 years, 20 years, whatever it is. It has that pristine collateral, digital gold. I think that's its use. But there are a million other interesting use cases that will be applied to the general economy. It's just a funny juxtaposition of views, Bitcoin maximalist and multi-chain future. And I think the first step is to get American investors to own these businesses. And then these businesses will know how to allocate money into the space. Look, Kraken coming with Inc., right? Think about some of these things. Ledger with Ledger Live, right? 3 years ago, there was no Ledger Live. It was just a hardware company. These companies will pivot and iterate into the future. The worst advice, the piece of advice that's most wrong, I would say that is given a lot, and that was given to me too, is that, when you hire somebody, you want to hire the smartest guy. Completely wrong. It's completely wrong. You don't need the smartest guy. You need the guy with the best values, with the greatest passion. When I was young, I thought, okay, I do well in school. I'm successful. I this, I'm that. I'm very smart. You want to hire and have lots of guys who are smart around you. Or who is it? Bezos or some of the great billionaire guys. They're like, oh, I want to be the least smart guy in the room. I want to be surrounded only by smart people. So I think that's way overrated. Much more important to have passion about what you're doing and to have a good value system. Unfortunately, it's hard. 2-3 times in my career, you hire someone who's bad morally, and it's a terrible experience. Honestly, in my mind, I hate to say it, but sort of is a little bit of a gentleman, is a proper person who, I think has humanistic values, who doesn't necessarily place money above absolutely everything. Like, very vulgar people out there, people who grew up with nothing. I understand they have that mentality. They need to grab everything from everyone. Maybe they're the most successful, I don't know, but I don't need to live in that world. And I never have. Let me tell you, a bad value system, I would say, you'll know it when you see it. Unfortunately, sometimes they're good at hiding themselves. It's especially problematic, in these very intense money-making areas like crypto, where it's an open field, and I love how open it is, and it's a little Wild West, and I love all those things about it. But with that comes some grifters, and you have to really navigate. Also, look, everything I do in my investment career, and especially now, is for my LPs and my investors. They're more important than I am. So I am a fiduciary for their capital. That is how you have to think. And a person who is morally problematic and greedy and this and that, they'll never put their investors ahead of themselves. But the difference is the investors in these funds are all my friends and people from my network, people I've known 30, 40 years. So all I care about is making them money. And anything that gets in the way of that, to me, is a problem. And my team now, today, as we exist, everyone has that mentality. It was not always the case. It has to be. That is the most important thing. If you go into the money management business, if you are an investor, you must be a fiduciary for your investors' capital. Your number one priority is to make them return. That's it.
Tapiero calls the next decade, from 2025 to 2035, the decade when crypto finally explodes into the mainstream. But he's not selling dreams of smooth sailing. The journey to 1 million Bitcoin will be anything but stable. In fact, he predicts a rocky climb. Bitcoin might shoot up to $180,000 in the next 18 months, crash down to $60,000, and then, as adoption kicks in and infrastructure matures, rise to $600,000 and beyond by 2030. But this volatility isn't a bug. It's the nature of a young and messy market, full of scams, confusion, and regulators who still don't understand what they're dealing with. Tapiero points to disasters like Luna's stablecoin as things he avoided. He called it a clear oxymoron from the start. His belief is simple. The real problem isn't technology, it's trust. To fix that, he says crypto needs Wall Street. Get companies like Kraken or Circle listed on the New York Stock Exchange or NASDAQ so they're held to the same standards as Apple or Google. Give pension funds and endowments something solid to invest in without fearing 80% drawdowns. Build crypto businesses that act like real companies, not white papers with a logo and a dream. Tapiero says the US must lead this charge, because if America doesn't lead, someone else will. He also believes in a multi-chain future. Bitcoin is digital gold. You never sell it. Buying Ethereum, Solana, and other chains will power payments, smart contracts, NFTs, and more. Ignoring that is like ignoring the internet in 1995. For everyday people, his message is urgent. Stop trading. Stop chasing the next big token. Stop thinking you'll get rich in a month. Buy Bitcoin and Ethereum, store them in a hardware wallet, and forget them for 10 years, even when the market crashes, even when everyone else is panicking. Real wealth in crypto builds slowly. His own farmland business took 7 years to sell for $450 million. Crypto is the same. His final warning hits hard. The moment you feel too confident, that's when you lose everything, because confidence turns into blindness. That's when markets collapse. Survival in crypto doesn't require genius. It requires patience, planning, and the ability to outlast chaos. So, will Bitcoin hit $1 million? Tapiero's track record says yes, but only if you stop gambling, stay calm, and play the long game. Because in crypto, patience isn't just a virtue, it's the only strategy that works. Thanks for watching, and don't forget to like and subscribe.